My titties were showing. Hey guys, so I've been getting some messages this week about the stock market sell-off, and my response to everyone is, what sell-off? The market's barely sold off. All right, for those of you with heavy exposure to the Nasdaq, whatever, fine. Maybe it sold off a little bit more, but guys, we've been going straight up for a year now. I mean, the S&P is barely off the highs. I mean, what's everyone freaking out about? The reason for the sell-off is simple. It's the bond yields are going up. What tends to happen when bond yields go up? People do freak out a little bit. Stock investors start selling. And the first thing they start selling a lot of times is the very growthy names. Pretty much everything in the Nasdaq in the tech sector has been uber growth. Even Apple's tape on Friday looked really sick, especially if you look at the last 15 minutes on Apple. Whew. I mean, that was quite a sell-off for like the last 15 minutes of the day on Apple. What I'm trying to say is this isn't really a sell-off. So why did this happen? Bond yields are going up. There's the expected reopening, which is going to have a positive growth effect on the U.S. economy. And this is all theoretical, of course. We don't know if the reopening is going to actually go that well, or if the jobs can even come back at this point in time in restaurants and hospitality. But bond yields go up, people start freaking out, and the first thing they do is sell growth. The move isn't really that big. I'm expecting at some point we have a larger correction. I don't think it's here yet. I think there's a possibility this week people stop freaking out and this dip gets bought back up. The other thing that has been really big on the trading floors of 2020 and into 2021 is Tenor. There's no alternative, meaning you can't get any return on bonds. You can't leave your money in a bank and get a safe interest rate. So where else can you move your money into stocks? Well, with interest rates rising, Tenor might come off the table. If interest rates and bond rates start rising, there are some alternatives now to buying stocks. You can buy alternative investments. Or just leave your money in the bank and have a risk-free rate of return right now. Now, interest rates are very, very, very low right now, still, even with the rise of last week. Unless yields continue to rise very, very strongly, I would not freak out. The reason the interest rate rise is potentially scary is bond investors are signaling that Jerome Powell is going to raise interest rates in the future. That's what typically happens when you have the potential for inflation. So with Jerome Powell has already said he's not raising interest rates. I'm not really scared of Jerome Powell raising interest rates. In fact, I'm pretty sure Jerome Powell's on the phone buying some more printers right now so he can print some more fucking money right now. And good for him. Keep printing the money. I'm not freaking out, mainly because I don't have that much money in the market, but even beyond that, with the Federal Reserve constantly printing money, still saying they're going to go out of their way to keep interest rates low, with the job market where it's at right now, I'm not freaking out about this market right now. Also, what tends to happen when interest rates go high, the demand for a currency also rises. So the big trade, I think, of this year, more than even buying stocks is not necessarily the most obvious trade with the money printing. It's actually shorting the US dollar. And what ends up happening is everything priced against the US dollar actually rises. Gold rises, housing rises, stocks rise. Why? Because your US dollar is less valuable. A lot of assets that are priced in US dollars are going to rise. So what ends up happening when interest rates rise is, oh, my titties are showing. But what ends up happening when interest rates rise is there could be a demand for US dollars from foreign countries, right? Foreign countries will see, hey, the US interest rate is actually pretty good now, and start buying USD with their currency, causing a demand spike in USD, which also forces other asset prices that are priced in US dollars to actually start dropping a bit. Right now, I would not freak out about this. Let's watch the tape a little bit more. And for those of you who are panicking over the tape action in this past week, we've had a worse rout in August. And honestly, I mean, that's completely removing the stock market crash we had last March, right? We had a worse rout in August. We had another one from mid-October to November. And honestly, the tape action from November was just uber bullish. So if you're freaking out about this, you're just way too exposed to growth names. I would keep some cash. I would diversify into more S&P kind of bellwether names. I even told you guys I was selling space last week before earnings because they were. I figured earnings was gonna hit a growth name like that. There was too much risk to keep a space into earnings. And if you guys watched my Sunday video last week, I was even telling you something is up with the tape, right? The tape looks all jacked up. I don't know if this is going to turn into a full sell-off. Somehow, I doubt it. With a $1.9 trillion stimulus coming out, any rise in the demand for US dollar is going to be met with Jerome Powell's money printing, okay? Keep in mind, we might not have the best economy in the world, but we have the best money printers in the world, and they're getting ready. I don't think it's just the bond yields. I think the market's been overvalued for a long time. Don't freak the fuck out if it's going down by 10% or whatever. If you're freaking out about this sell-off, you just have way too much exposure to growth names right now. Keep that in mind. Let's watch this tape this upcoming week. I hope that gave you a little bit of an explanation. And honestly, it might sound generic, but as yields rise, there's no alternative trade is off the table. People can get some risk-free interest. The demand for USD rises, causing all asset prices priced in USD to potentially drop a bit. So keep those things in mind. Happy trading. I'll see you guys this week. Eyes up here, guys. Eyes up here, okay?